my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin. I'll start with lead. It's comforting to see yet again, that the market is still, just about, keeping within the May to October 2020 bullish shift pitchfork. Prices had moved up from the support of the big old 50% Fibonacci line of the February 2018 to March 2020 move at 21.27, back in the middle of June, up through the middle time, currently 22.18, to the upper time, currently 23.88 at the start of July. It is at this time that the market started to have contradictory actions, day after day. That's usually indicative of pretty heavy indecision. This indecision was channeled into forming an ascending triangle over July. 4 weeks ago we had a pretty seminal moment of a weekly key reversal up as the triangle came to a cusp. It looked like the move up was going to break the upper time as targets started to be reached on the top side, originating from back in June. At that time I laid out my thoughts on the action from mid-April being a possible very large bull flag stroke halfway hesitation. Thus I'd placed target X1 in the 23.71 area to give a conservative target for such a pattern. I'd also mentioned back then in June, maybe earlier actually, of another possible pattern. This other pattern was for a bullish cup with handle pattern. You see, the action over late February looked promising and suitable for such a pattern. I was confident enough then to leave a target X in the 23.51 area. These were the opportunities on the upside, and late last month they were achieved, and I removed both targets before next time. So what now? Well, I postulated 3 weeks ago, and I quote, "We seem to be having some topping action going on as prices have come back off after reaching all targets on the top side. A certain symmetry there, I think," end of quote. However, for a while it didn't look like that was going to be the case. You see, you must remember one thing over all of this recent action. And even now, with prices testing down to the rising short medium moving average, that's currently at 22.79, is a most valid point. This market is still overall bullish, as I stated right back at the start of this and earlier commentaries. We are still within the May to October 2020 bullish shift pitchfork. Until that is broken or replaced by another pattern, then it still is supreme. The immediate key action is whether the rising short medium moving average will be beaten, because if it is, then we'll have to really look at first the October 2019 high at 22.63 and then at the rising middle time. LME 3-month tin. I've been repeating this here for weeks and weeks. It is that the overall bullish incentive is alive and strong here. This was because the original move back up, which started some 23 weeks ago with the January to March bullish shift pitchfork. This bullish shift pitchfork has driven prices higher all this while. Recently prices have even reached up and pierced the upper time, currently at 35.420. This move higher, though setting new all-time highs over the last 2 weeks, also highlighted some indecision within the market, as if this move up might be just a little too much on the upside. Recently we've had immediate countering patterns indicative of intraday indecision. Now, we've had indecision before in the congestion around 33.450 to 33.475 area, and it looked like we might stall. However, the same bullish shift pitchfork that has managed to move prices up from way down in the 23,000 area back in March pushed prices up through it. Indeed, it could be argued that the recent late June, early July based bull channel has been responsible for this excessive enthusiasm. Well, we're out of the bullish bull channel now, which is currently 36.005 to 37.820. And the only bullish talisman still standing is the upper time. Overall, it is, as I said, week after week after week, until this pitchfork is broken or amended then it will still govern the bullish incentive. The bullish shift book is still the one thing this market has to deal with, and prices can drop quite a way before they break this pitchfork. Now that doesn't preclude us from looking out for early signals. That's the problem when you see the market rely so much on one pattern. It can be hellish when it breaks. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.